Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Financial wellness has become a bit of an industry buzzword in recent years, but one lender has built its entire business around it. WISR is an ASX-listed neo-lender that focuses on personal loans with the goal of improving the financial wellness of customers. And it appears to be working, with WISR taking market share from the big banks. Anthony Nantes is the CEO of WISR. Anthony, welcome to Fear and Greed.
Thanks, Sean. Great to be here.
So it's an interesting story, the WISR one. It had a major shift in focus from peer-to-peer lending to launching a loan funding facility about 5 years ago. Just give us the 101 on WISR, how it came about and why that shift occurred.
Yeah, look, the starting point's always been about building a purpose-led company in this space. And there's lots of really great reasons to build purpose-led companies. And from a shareholder return perspective, it's a great business angle because they typically outperform something two to three times. Typically, other companies, from an employee point of view, it provides a real why to why people come to work. Having a purpose around financial wellness as a core to what we do actually defines what we do inside the company, how we should behave, why it's important to put the customers first and what we kind of stand for. It's great from a customer point of view because they know what we stand for. There's a level of conversation we can have with them around what our purpose is, and when we're extending credit, what our kind of reasons for doing it would be and what we want them to achieve with it. And so that was really the starting point of the essence of the idea. And then, peer-to-peer lending at the beginning conceptually seemed like a really good idea, right? You sort of cut out the middleman. You've got sort of investors on one side and borrowers on the other side, and you can make it really efficient for both sides. And fundamentally, though, there's some real challenges with double-sided marketplaces in terms of matching supply and demand.
Yeah.
And particularly when it comes to the nuances of finance and credit and extending credit. I think very, very early on, we took a view that it wasn't really a scalable model. And I think we probably did it earlier than a lot of others. And that's probably come to fruition. If you sort of see most of those models globally haven't really played out. But it was probably in line with what we were trying to achieve, and a good lesson for us in terms of being purpose-led is one thing, but you've really got to build a business model that can deliver that purpose that's going to be sustainable.
Okay, so it's not peer-to-peer lending, it's accessing financial markets. But in terms of the funds that you're lending, where's that come from?
Yeah, so a combination of capital providers. So, we have debt wholesale warehouse facilities with major banks and things like superannuation funds who invest into our loans, as well as the overall credit market. So we tap into sort of the bond issuance market through securitization deals so that we can utilize kind of the entire credit system at the back end. So rather than, essentially being a P2P platform with a human being on one side, another human being on the other side, we do it in bulk. So we go out to the entire credit market. We take really large quantities of loans so we can get the best sort of prices possible from the whole credit market, and then we can take those to consumers.
So what are most of your customers using personal loans for?
A range of things. We're probably split into a few different buckets. The first bucket is sort of asset finance, secured vehicle finance. So buying a car, second car, caravan, boat, a motorbike, those types of things. The second big bucket for us is actually debt consolidation. And by debt consolidation, what we're seeing is, and the vast majority of this is customers who've previously accessed credit from the big four banks. So they might have taken a loan out from Westpac at 13, 14, 15%, and maybe a bit of credit card debt on a bank credit card at 22, 23%. And they'll look at those two products and they might be averaging, 16, 17, 18% on average to be servicing that consumer debt. And they realize if they actually shift that to us, that there's a pretty significant savings they can have. So we see a lot of direct shift from big four bank customer directly to us. Mm-hmm. And then the third bucket is sort of other use cases. So we do a lot of home renovations, bathroom renovations, kitchen renovations, swimming pools, elective medical, travel, basically anything that someone wants to do with $30,000, $40,000, $50,000. We will fund if it's for a good purpose.
Okay, so it's $30,000, $40,000, $50,000 is a typical loan, is it?
Yeah, so average loan for us is $30,000 over sort of around about 5 years. And this is kind of an interesting point around kind of where does our business model sit? So historically, if you look at the consumer finance market in Australia, the big four banks wrote all prime consumer credit. Yep. And so if you're a good customer and you had good credit, you would go to one of the big four banks, and that they wrote sort of 80% of all consumer credit in Australia. And then if the bank said no, you would go to a non-bank lender.
Yep.
And so non-bank lenders would charge more than banks, and they would do sort of low docs or self-employed, or if you had other issues in your past or, made a couple of mistakes and a bank thought you were a bit risky, then you'd go to a non-bank lender. And so traditionally, that's where non-bank lenders have kind of existed as will be the yes when a bank says no. Whilst we are a non-bank lender, our business model is very, very different. We want to be the first yes, and we write bank level credit. So we are trying to get the very best customers in Australia, the most creditworthy customers in Australia, and we want to give them a significantly better deal, experience, and overall end-to-end relationship with us than what they would get from going to the big four banks. So we're really going after that 80% market that the banks have sort of been playing in of prime, really good quality customers. And like I said, we want to be the first option, not the option when the banks say no and coming to us. We're not an option for that, because if the bank says no, we're likely to say no as well.
Stay with me, Anthony. We'll be back in a minute. My guest this morning is Anthony Nantes, CEO of WISR. As you're talking there, Anthony, I mean, it kind of took me back to the Aussie home loan early days in WISR, where they took on the banks in their own market, in home lending. In that instance, you're sort of taking on the banks in consumer lending in their own markets, as opposed to kind of necessarily chasing people at the edges that the banks don't want.
Yeah, I think there's some interesting similarities. I mean, I think one of the things that we do that's quite different in this space is, from the very beginning of launching the business, we've really tried to structure the product and the offering in the customer's best interests. Because, when you're lending money, getting $20,000 or $30,000 from us or from Westpac or CBA, whoever else might be, it's the same product at the end of the day, right? $25,000, $30,000 of money in your bank is the same. It's hard to differentiate at that level on a product when you're lending.
Yep.
So we've looked at the other things around the product as ways we can differentiate. So from the very beginning, offering a product that had no monthly fees and no early repayment fee, which was sort of a strange concept, right? So banks would traditionally charge early repayment fees. So if you borrow money from them, you say, look, I don't need, I'm sort of ahead of the game, or I want to pay this loan off early. The bank would say, well, we assumed we were going to make a certain amount of money from you. You're paying off early, so we're not going to make it. So you got to pay us a fee because we already assumed to make some money off you, right? Which is kind of a crazy thing. So we did away with early repayment fees. And then we also did some extraordinary things, like we created an app and product to actually help our customers pay these loans off faster.
Yeah, I mean, that financial wellness thing is very important to you guys.
It's the raison d'etre of the company. It's why we exist as a business. And doing that well is good for everybody. Doing the right things by our customers actually might mean we might make a bit less margin than banks do.
Yep.
If we're helping our customers repay their loans early and faster, we will make less margin than the banks. But our fundamental belief is we're going to build a much, much bigger company as a result of doing the right things by our customers.
And you do specific loans like electric vehicles as an example. Why is that all part of that purpose?
Yeah, I think it is. I think it's about being cognizant of the community in which we live and operate as a business. And so building a business model which structures ourselves as a member of the community and the way we'd want to behave as a member of the community. So that means leaning into things that we think are going to have good, sustainable, long-term benefits for everybody. Accessing credit is super important when someone is. It's a really, really important part of the fabric of our society.
Yeah.
Making that a really good experience and helping people do things like buy electric cars and other things that they need to do, whether we can actually lend them money or not. Really being cognizant that even if we have to decline someone and say, look, actually, sorry, you can't actually afford this loan, which is something we have to do a lot.
Yeah.
Making sure that's also a really good experience, because when someone needs access to credit, it's usually because they have something really important in their life that they want to do.
Okay, so WISR's had 23 consecutive quarters of loan growth. You've been running big marketing campaigns, including one during the Olympics last year. What's next? So it's consumer lending and keep growing that. Do you think you'll ever go into business lending? Do you think you'll ever go into home lending? What is next?
Our longer term vision is to say, we think we can be the number one alternative to the big four banks in consumer finance in Australia. We think there's a better model. We think fundamentally taking care of the customers, structuring products and the ancillary things around your product so that they're in the customer's interest is really important and allows us to grow and scale something pretty unique. the banks still write the vast majority of all consumer finance in Australia. I don't quote me on this number exactly, but they're down to around about 73, 74% of all consumer finance in the prime sector.
Yeah.
They've lost some market share. We've sort of taken 1% to 2% market share in the two products in which we have today, sort of unsecured and secured personal loans. So clearly there's huge amount of upside just for us doing what we're doing today. But between now and sort of, I guess, the future, we would see ourselves expanding what we can do for Australians and growing our footprint across other financial products as well.
Anthony, thank you for talking to Fear and Greed.
Great to be here, guys. Thanks for the time.
That was Anthony Nantes, CEO of WISR. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.